Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 4th of July, 2023. So, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll disappear from that little left corner for a little bit, and I'll let you read the rest, and I'll be back in a bit. Okay, so now then, also just before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us, guys. So, if you have any questions, you can always reach out to us, and we'll happily help you out. Now then, guys, let's jump into the chart. So in general, today, as you know, the U.S. is closed due to their celebration, but the rest of the world is operating. Nikkei 225, looking at the picture here, we saw a bit of a decline. We saw a bit of a drift lower, which is still fine, okay, because look, we've broken this downside resistance line. I talked about it, and I said to you that even if we do retrace, I mean, consider the fact that we might see a retest of this downside line from above. And I mean, we do see this happening occasionally, and I keep on mentioning this. So, let's see if we can drift a little bit lower, and let's see if we can actually, rebound from it back up again. So that's the scenario that I'm leaning to right now. Unless this starts breaking below this downside line and falls somewhere below this 32,923 territory, or in general, maybe not that level itself, but the area near that level, or just the area near that 33,000 mark. So if that gets cleared, then yes, potentially this could open the door towards some lower levels here. But again, if we do see something like that happening, then we'll pick up on that one. ASX 200, boom, guys, there we go. Beautiful move to the upside. I talked about this hurdle here, the 7,200 zone. And, thank you very much, RBA. The Australian Central Bank, the Reserve Bank of Australia, or to be more precise, kept the rate unchanged. And, 4.1. The previous one was at 4.1. The expectation was 4.35, and then now they decided to keep it. I mean, I'm loving RBA. It's just they keep everybody on their toes, and they came out saying, "Look, I mean, inflation is still high, but it's going down. So let's see what are the impacts from the previous two surprises, surprise rate hikes, and we'll then decide further." So in a way, they're kind of pushing themselves, or let's say allowing themselves some time. They're buying themselves some time in order not to, let's say, lift rates very quickly, which in my opinion, it's logical. So, you do a method, you do something, you see how it works, give it a bit of time. If it's not working, okay, you can always go aggressively in. You can always kind of do a radical thing, because you can then kind of say that, we had to save the economy in a short period of time. So, or we had to, kill inflation very quickly. So that's why, like I said, RBA, I think that they're playing quite an interesting game, I would say. And you can see here, ASX 200 popped higher on that news. Yes, we know that lower rates are better for the stock market, cheaper lending for the companies. And everybody got already adjusted to the 4.1 and they kept it. So the market sees it as a positivity and, pops nicely to the upside. Look, that's not the case, of course, with the Australian dollar, but I'll get to that in a bit. Because today, look, I don't have much US to talk about. I have more like other things to focus on. I think that I will focus on mainly like commodities, cryptos, and currencies, because again, indices might be on a little bit on the vague side today. But anyway, we'll see. So yeah, this is the situation with the SX 200. Jumping into the S&P 500. Oh, by the way, Stromika. Good morning. Good morning good morning. I hope you're having a fantastic, wonderful start of Tuesday. I hope everybody else who's joining in right now is having a wonderful start of Tuesday. Let me just put this into the chat. Good morning, everyone. As always, good morning. There we go. Yep. So, but yeah, Stromika, thank you very much for your comment. Hello to you. Coming back to this, the S&P 500. So, look, we stalled here. Yesterday, we ended in positive territory, and today, kind of, you can see that, I mean, yeah, we stalled yesterday. We stalled below that 4,493 territory I spoke about previously. In general, we're still below that psychological 4,500 level. So probably it's not maybe the 4,493. I'm just kind of marking that because that's the highest point of June. Or sorry, sorry, the high of the 16th of June, not the highest point of June. The highest point of June is around here. Let me just put this one on the chart. So it's near that 4,500 level. So basically, we're still below it. Let me just put a line like that back on the chart here. So, yep, there we go. So basically, I'm keeping an eye on this territory, the whole territory around that 4,500 level. If we do clear it, then yes, I will get comfortable with some higher levels, and then I'll aim for that 4,509 zone, which is marked by the high of the 21st of April, and that gets cleared. Well, guess what? Higher levels could be met. So we could then start targeting that 4,600 level, or even above that, a little bit above that, because a little bit above that, we do have the highest point of March of 2022, guys. For the downside, I need to see a drop and break above this, below this upside line, drawn from the low of the 24th of May. And if we do get that, then yes, potentially more sellers could join in. DAX, the German index. So again, look, don't be surprised, for example, if today we could see, we could see nothing here, because in general, I am waiting for tomorrow. Tomorrow is going to be a bigger day. Tomorrow, let me just start off. I mean, where to start? RBA again will be, sorry, not the RBA, but Australia will be again, and will be heading the economic calendar, the Wednesday's economic calendar with services PMI numbers. Japan also will deliver services PMI numbers. Also, Australia actually will deliver retail sales. We'll get the from China. We'll get the Kaizen services PMI, and then Chinese composite PMI. So, in general, as I've mentioned yesterday, this week is a PMI week, and we do get a bunch of data coming out. So. Then of course Europe will start with their services PMI numbers, and UK will also deliver the services PMIs. But probably one of the other things that everybody will be watching will be the FOMC meeting minutes. Now, it might not be something like really extraordinary new information, no, but it's the reaction that everybody's always like looking forward to, like the volatility. So yeah, just kind of keep that in mind and be cautious about it, and let's play it safe, guys. Let's wait for the news to come out and then do something about it. So yeah, the German index at the moment, look, I said to you before, as long as we stay somewhere above that 16,150 territory, I'm still leaning towards the upside. The US dollar index. So yesterday we had a bit of a roller coaster ride. I mean, yesterday we got some data from the US. I mean, we had some manufacturing PMI numbers, which came out as expected, but lower than the previous. ISM manufacturing PMI number did disappoint. Everybody was hoping for a bit of an increase, but actually it came out not only below the forecast, but also below the previous number at 46. ISM manufacturing prices, yeah, also declined. So in general, yeah, that didn't work well with the US dollar, and we saw a decline. However, it did recover. And pushed back up. Look, from the shorter term perspective, I think we have something in the lines of this. Let me just double check. So, yep. So we're kind of still holding above this short-term, very tentative upside support line taken from the low of the 22nd of June. I don't know, like from the shorter-term perspective, if you want to keep that on the chart, yeah, you can. So maybe let's jump into a 4-hour chart. So yeah, like looking at this picture, this maybe clears it a little bit better. And yes, you can see that we are still holding above this. If we suddenly drop below this, then, well, I mean, yeah, this could open the door towards some lower levels. Then for me, look, if you want to keep an eye on the 4-hour chart, for example, then for me, I would say a drop below all of the EMAs here might do the trick for some sellers here. And yes, because at the same time, we would already be placed below this upside line, and more, yeah, more downside could be possible. So keep that in mind. But at the moment, from the very, very short-term perspective, as long as we stay above this upside line, there is still potential to go a little bit higher. So yep, I'm watching this for now. You see on the daily it looks differently, and on the 4-hour chart it also looks differently, but still the idea is still the same. But I'll remove it for now in order not to kind of complicate our lives. And look, this is where the daily kind of chart helps you out, because you can see that we're currently getting a hold up below the 50-day EMA, and in general, we're below all of the EMAs. So what it means that there is still bearishness. There could still be some downside. I mean, this might just help the bears to take advantage of the higher price and then, move lower. So basically, as long as we stay below this 50-day EMA, I am leaning towards the downside, but I'll get more comfortable with the downside in the short run if we do fall. And look, if we start falling below the 102.54 territory, but I think the safer option is to wait for a drop below the yesterday's low, which is near the 102.41 zone, and then yeah, we could maybe attack the downside. Gold. Gold in flirting mode right now. So it's flirting with that downside line. I said before that this is a little bit on the sensitive side, but okay, look, it seems to be kind of playing out. So what I talked about previously, I said that if we do break and stay above this downside line drawn from the high of the 3rd of May of this year, then yes, I will consider another move towards this other slightly less steeper downside line drawn from the high of the 2nd of June. And look at this, it perfectly coincides with the 50-day EMA. So yep, that's my game plan for now. For the downside, I need to see a drop below the 200-day EMA and drop below this 1903 zone, just to be a little bit more on the safe side. So in other words, yeah, a push back below this downside line is required, but then I would like to see like I said, a clearance of this 200-day EMA again. Silver is also still holding on to that 200-day EMA, as you can see on my daily chart. So it's providing good resistance. And I said to you before that, look, as long as we stay below it, then there's still hope that the bears could, step in again and drive this one lower. But if we do climb and stay above this 200-day EMA, I will consider a move, a larger correction to the upside towards this downside line drawn from the high of the 4th of May. Now, only in the short run, and only I'm considering this move, because in general, if this downside line continues to provide resistance, then until the trend line is broken, we cannot say, anything about the upside, because this is my upside scenario from here on a break of this downside line and a push above the remaining EMAs, and then yes, potentially more more buyers could join in here, and we may see, you know, this one traveling nicely to the 24.53 territory, or maybe above that. But in general, let's keep it short and simple for now. Let's monitor this 200-day EMA. If we do push above it and stay above it, I'll consider a larger correction here to the upside towards this downside resistance line. For the downside, that's what I'm saying. Keep an eye on that 200-day EMA. If it continues to hold, maybe another decline here could be possible. For that extra confirmation, maybe, just maybe, I could stick to this little territory somewhere around here near this 22.59 zone, somewhere around this, or maybe the 60 could be good as well. So yeah, that's probably the safer option, you know, if you want to start looking at some lower levels. Some of you might say, the ones that are very, very cautious might say that, hey, maybe, you know what, I'd rather stick to this and not do anything. This little short-term tentative upside support line. Well, you're not going to be wrong there. If you're willing to wait that, then yes, of course, you could keep an eye on it. And I think that could be a little bit of a more safer option. But again, everything is still subjective. Everything is still, you know, relative, because again, we might see a drop, but then some sort of news comes out, affects the dollar, and then boom, you know, we have a reversal, a sharp reversal back up. So you always, in general, guys, you always need to have your stop loss in place and only risk what you can afford to lose, because that's the goal and that's the kind of the logical approach to everything. So just be careful on that. Oil. Oil is nicely holding on to this downside line still. As you can see, it's providing good resistance. We had a false breakout yesterday, and now we're drifting back down. Look, in general, I will stick to my idea, and if I want to go higher, I will aim for it if I do see the body of the daily candle staying above this downside line, and then yes, I'll go for higher levels. For the downside, I would like to see a drop below the 67 territory, as I said before, and then I'll go to the downside, because all this territory right here, it could be part of the nice descending triangle pattern, which maybe not the most exciting one, because maybe you need to draw it this way. But yeah, because maybe this way actually could make a little bit more sense with yesterday's pop. Look, I'll draw this one because this here is the Sunday candle, so I'm not really counting this one right there. But yeah, maybe this could be the better option. But again, I'll put this one from now on. I'll have this one on the chart as well to see which one's going to work out better. Now, wheat. Look, I talked about this as well after we broke the downside line. We had this fantastic rally here, and you can see it, and then said that, and then we started correcting back down, and it said that, look, we do revisit the broken trend lines from the other side, and there we go. This is one of those examples. And what I said to you as well, that look, I'm not giving up on the bullish side yet, because again, if this drifts low or tests the downside line and then rebounds from it, great. We could see some more upside, you know, going back to maybe the 100-day EMA or even the 200-day EMA. So yeah, sugar. Something as well that I mentioned yesterday, I do look at these exotic commodities because I do see value in them, and there we go. A beautiful move, mission accomplished. Team, we're heading home. Well, in a way, yeah, we can actually rest now, because look, it did what I was hoping it was going to do. Yesterday, I said that if we do push above that 23.6, I'm aiming for that. I'm talking about 23.6 on the Fibonacci, because the numbering is very close, actually. So, and then I said that I'm going to aim for that 38.2% retracement on the Fibonacci, which is near the 100-day EMA, and that's approximately around that 23.60 zone. We got that. So now the question is, can we go higher? Well, look. If we do push above the 100-day EMA and stay above it, and we stay above that 38.2, then yes, my next target is the this 50% retracement on the Fibonacci, which is not far from that 24.23 level marked by the inside swing low of the 6th of June. Jumping into cotton, this one's also interesting. I've mentioned this before, but this has been a bit of a roller coaster ride since November or the end of October, I would say. And look, at the moment, I'm trying to simplify my life. In general, I really like it. But as you can see, overall, we are not, well, we're trending. A range is also a trend, but not the, not that range that everybody's kind of used to. Sorry, not that trend that is everybody used to kind of thinking of all the time. So everybody always thinks of a straight line. But look, what I'm going to do here is I'm going to mark a few levels, a few territories. Now, they're not specific levels. They're just ideas for a territory. So, in general, I think I need to do this. I need to do this. There we go. And yeah, so this is what I'm marking here, and I'm going to mark the same story on this one. There we go. So this is the idea here, and this is what I'm going to be waiting for. Now, I'm going to be waiting for a clear breakout. Once I get that breakout, then I'll consider the next short-term directional move. So if we do break to the downside, break through the lower side of this range, I'm going to aim lower, but I'm going to aim for this. For the 70.22 level marked by the lowest point of October of 2022, or in general the lowest point of 2022, basically. So yeah, that's going to be my game plan. In the meantime, I'm just observing the price action. If you do like ranges, then this one might be for you. Jumping into Bitcoin, guys. So yeah, this one is a tease. Honestly, and I really don't like this because look, Bitcoin Cash exploded. Other Litecoin moved nicely to the upside. Other ones are also kind of moving-ish, but the Bitcoin itself is not really doing much. So yes, it is forming something of a bullish flag here, but it's just stuck with that 31,000 mark. It just continues to oscillate around it. It violated it, but it's struggling to kind of push away from it, and that's what I don't like. I really don't like scenarios like that, and that's why for me at this point, I would say I, although I really would like to lean towards the upside, but okay, it's giving me concerns. And if suddenly the US dollar pushes to the upside, this one, yeah, this could fall off the cliff here, and we could see BTC USD drifting nicely to the downside. However, with the downside, as I said before, this 28,440 zone, that's what I'm keeping an eye on in order to consider a move lower, because at the same time we would fall below the 50-day EMA. But of course, yes, I have to go from what I see, and I have to go from the TA rules, and I see that we are currently stuck with this 31,000 mark, and in general, it's we have this little consolidation, which could be seen as a bullish flag, and could be considered, as a continuation pattern here. So that means that push towards that 32,000 or even above could still be a greater possibility. But for me personally, I need that confirmation. I need to see the, at least the crypto comfortably staying above this 31,000 mark. Ethereum also gradually pushing to the upside. Not much, to be honest. In general, okay, yeah, it's working out. But this 1929 territory is, yeah, it's still kind of working nicely, and I'm still aiming for that 2000 territory, and together with that 2020 zone. But yeah, again, the same story as with Bitcoin, basically. At the moment, I'm cautiously bullish, but I'm, not excluding the possibility. If it falls back below the 1929 territory, then maybe we could see a bit of a retracement, but we'll see. Bitcoin Cash. Bitcoin Cash. So after this nice, beautiful rally, we're now correcting lower. That's fine. We're forming something of a bullish flag again. So yep, maybe this could push back to the upside. However, I'm looking at this 302.50 territory, which is marked by the high of the 5th of May, or actually, is this the highest point? Yep, that's the highest point of May of 2022. So if we do push back above it, then yes, I will go back to the upside. So something like this I will consider. For the downside, look, at the moment, what we're seeing here is a nice little correction. So let me just draw my favorite Fibonacci here, and you can see that we are approaching my 23.6. So if we do fall below it, and when we fall below this 268 zone, that's where I'm going to consider a larger correction to the downside towards maybe this 38.2 on my chart, 38.2 on my Fibonacci on my chart. So Dogecoin. So, yeah, it kind of does move a little bit, but as you can see here, it's waiting for Mr. Musk to do something, I think, about it. Yeah, in general, look, I talked about this little hurdle, not this one right there, but this one right here. I talked about it, and I said to you that if we do push and stay above it, then yes, I will go higher. I will get a little bit more excited with the upside, but actually I think that I need to go slowly on this and initially aim for this territory. So this highlighted zone here is between the 0. Or actually, let's put it this way, it's near that 0.07 territory. If we do clear it, I'll go a little bit higher and I'll aim for that 0.0750 zone, approximately around there, and then I'll take it from there. That's because around here we also have the 200-day EMA. For the downside, well, the downside here, I will consider that if we do fall back below the 0.0626 territory, somewhere around here. It provided good support recently, as you can see here, and if we fall below it again, then yes, I will aim for this lower side of the falling channel, because don't forget that we are in a falling channel overall in Dogecoin. USD, which is Polkadot. Now this one's interesting. I talked a while ago about this one, and I said to you previously that if we do fall below the 5.15 territory, I'm going to aim lower. And look at this, perfect. Just honestly, technically perfect scenario. We pushed lower, tested my 4.72 territory first, and then I said 4.23 is my next target. Look at this, beautiful rebound, beautiful move back up, and there we go. So what's next? Basically, I would say next is this barrier right here, this 5.61. So let me just actually mark it for our future reference. There we go. Yep, this is something that I'm going to keep an eye on. And in order for me to go lower, probably, again, some of these levels should work out most likely. So I think I will stick to this little hurdle, this 5.15 zone. If we do fall back below it, we fall below the 50-day EMA as well. And yes, this could open the door to some lower levels. And maybe, just maybe, this could coincide with a possibility of a break of this. No, not this one. I think it's this one right there. A break of this upside line. Yeah, so all this could, work out nicely for the bears. But again, we need to see a drop below this. Now jumping into a few pairs, AUDJPY, there we go. We had a bit of a decline. I can see that now the pair, or the Australian dollar, is trying to recover somewhat some of those losses. But in general, look, after we broke the upper side of the falling wedge, and now I can say that it's a falling wedge. It was a falling wedge, so we broke it, and yeah, we're still trading, in a way higher. So I'm going to remain bullish. Look, I have this arrow because I'm still applying the logic of the broken trend line. So we do sometimes retest it from the other side. And as I said before, and I've kind of already proven you that this happens. So once we let's say like this, how you could play it out in the short run, basically. So again, with some support and resistance barriers. So the resistance one here is the 96.70 zone, which is the high of today. If we do push above it today, for example, or tomorrow, then yes, slightly higher levels could be met. But if we continue to trade below it, then maybe a bit of a retracement here could be possible. So just keep that in mind. So yeah, that's the game plan for now. Let's wait and see. Look, for the downside, I would like to see a drop somewhere back below this 95.15 territory, and then consider maybe some moves lower. But at this point, look, the stock market is closed. I mean, we might not see some great activity here on the AUDJPY. today, maybe tomorrow. But yeah, the U.S. stock market is closed, and we'll probably have to wait and see what's going to happen, how the indices are going to react after they come back on Wednesday tomorrow. AUD/USD. So yeah, also initial reaction to the Australian or to the RBA interest rate no hike. Let's put it this way. Not a cut, but no hike. Then yeah, it was initially a negative one because again. The Australian dollar weakened, and that's not favorable for the Australian dollar if the interest rates don't go higher, and the RBA interest rates don't go higher. But as you can see here, the bulls decided to push this one back up, and now we are trying to find a way here how to play this one out. Look, yesterday I talked about the 0.6663 territory right here, but I think it's time to adjust it, and I think it's time to adjust it to this, because this area right here, the 0.6640, did provide a fantastic support, and we did rebound from it and push back up. So if we do drop below the 0.6640, my next target is the the lowest point of June near the or actually, is it? No, that's not the lowest point of June. That's the low of last week, the 0.6595. If we do get that one and then clear it, then yes, we could go further south, guys. And then we could go towards this 0.6560 territory marked by the inside swing high of the 30th of May. But from the shorter term perspective to the upside, if you're looking for something like that, then maybe this idea here could work out. 0.6694, if we do push above it, then yes, more buyers could join in, and we could see a nice move higher here. And a push above this 50-day EMA could be a possibility. So there could be a possibility for more bulls to step in, and maybe then we could go above the 100-day EMA, which is just around here, just around the corner, and then aim for that 200-day EMA. AUDNZD, haven't looked at this one for quite a while. As you can see, we have moved quite a lot, and one of my levels is still working out, this 1.0829. That's great. But in general, kind of it did work in partially, but let's have a fresh look, I think, on this one. And yes, one level that I'm going to try to get back is this one, which is somehow doing a magical job. And this 1.0829 zone is providing good support. Now, if we do drop and stay below it, then yes, I will go lower, but I am keeping an eye on this 1.0790, or actually, you know what, this 1.08 level. I'm going to keep an eye on that one. If we do drop below that one as well, then yes, further declines are possible. And on this one, on this pair, I would really like to go slow on this, because I will only aim for these levels first. So basically, first of all, keeping an eye on that 1.0829. We're just bouncing around it right now. If we do drop below it, my next target is the 1.08 zone, and then if that gets cleared, my next target is the 1.0771, approximately around there, this area, or actually maybe even the area around the 1.0770, just to be a little bit more adventurous, not careful, actually adventurous, because this is quite an important area of support, I believe. So previously acted as a good area of resistance and support as well. So let's keep an eye on this. So this is going to be my game plan for AUDNZD. For the upside, I think that the best option is to just wait for a push somewhere above this area. Let me just put this on the chart, and yep, there we go. So yeah, if we do clear, let me just actually mark this one right here as well, just because it's quite an important one. So yeah, if we do clear this territory on the upside, this area around that 1.0930, if we do clear it and go and we stay above it, then yes, I will go higher. I will go towards this highest point of June near the 1.1058. NZDJPY, haven't looked at this one for quite a while, basically, but yeah, looking interesting. So far, so good. It's trading above this upside line, but I think that it's better to get rid of it, because I think something else could be working out here. So First of all, I want to say that, look, we have been in this range for quite a while now. This range has been roughly between the end of April, or actually, I think, no, we entered it somewhere around here. So basically from around beginning of April, let's put it this way, we have been in a range of April of 2022, of course. And then, yeah, it dragged on for quite a while. And now we're seeing some or should I say the bulls are seeing some light at the end of the tunnel, and we're trying to go higher. Now, everything's looking quite nice, quite good. That's fine. We've cleared the previous, or should I say, we cleared the highest point of 2022. We're now, of course, we already made a highest point of 2023. Now, in general, what's next? Well, look, what I would say here is, first of all, I would like to go from the shorter term perspective. In general, yes, we had a good run, but I do want to be careful with this one because maybe this is one of my favorite veg patterns here. And, maybe this this could break out to the downside, and maybe we could see a nice move lower. However, while we remain inside a pattern, it still could go higher. So this is just the rule. And in general, I've seen this before. When we have a sharp move to the upside, then we have something like this. And then we have a continuation move higher. So that's the reason why you cannot really just blindly rely on this, like, oh, it's a bullish, it's a rising veg, maybe it's going to end up being bearish, so we're going to break lower here. Yes, according to some TA rules, that is the case, but you need that confirmation break first. And maybe this level, let me just put this one on the chart, maybe this level could help us out. This 88.48 zone, because a nice good drop below it would in a way place the pair below this lower side of this potential idea of a rising veg. But again, this is for now just an idea. As long as we remain inside a pattern, we could still drift higher. USDJPY, so jumping into a few dollar pairs. Yes, so far so good. This 145 area is doing a good job, and you can see, and I talked about it on Monday, and I said that BOJ is going to be keeping a close eye on, and they really need that. I think that they really need that 145 lower level to stay for now, like this. And so far it's working out. So we're seeing some a bit of retracement. In general, look, what I said to you previously, that if we do stay somewhere below that 145 territory, I'm going to lean towards the downside for a bit of a larger correction to the downside, because again, we had a steep up move here. Maybe a bit of retracement could be possible. What you can do here is, from the shorter term perspective, keep your eyes on yesterday's low near the 144 zone. If we do fall below it, then yeah, it could open the door towards some lower levels. USDCHF, still in the range, not much to talk about. I'm gonna leave it as it is, because I kept on talking about this last week, yesterday. So yeah, a clear breakout here is still needed. USDCAD, similar, well, in a way, similar story. This 1.3270 territory is providing fantastic resistance so far. And in a way, I could say that, we could see a drift lower. But again, also depending on how oil is going to trade, maybe if this one decides to go lower back down here, we could see this one popping nicely to the upside, this pair popping to the upside, because again, we could be seeing something of a bullish flag, maybe not an ideal one, but still a bullish flag-ish. And if that's the case, then yes, a pop higher. Maybe this arrow here this scenario could work out nicely. So in a way, I'm aiming for that 50-day EMA if we do pop and stay above the 1.3270 territory. GBPUSD, looking at the picture here, we can see that we are also trading kind of in a bullish mode. Look, 1.2760, that's what I said that I need to see in order to go higher. Some of you probably from the shorter term perspective will look at this 1.2727 zone. From here you could start already looking at some higher levels, but as I said, this 1.2760 could be a good target and a good area of initial resistance. Maybe it's going to break it. Okay, that's fine, but maybe initially it could hold here, and then we will have to we'll have to decide what's going to happen next. Will we break this or not? For the downside, my scenario is simple here. I need to see a break of this upside line here, drawn from the low of the 8th of March of this year, and then yes, I will get comfortable with some higher with some lower levels, and then I'll aim for the 100-day EMA or maybe even the 200-day EMA. GBPJPY, I just wanted to run this one by you because again, I've mentioned this before, and I do like to look at pairs which give me something interesting, and at this point GBPJPY is doing exactly that, because look, from the shorter term perspective, we are stuck in this little range between the 182.13.2 with and the 183.77. So if you want to go higher, a break of that territory here is needed, and then yes, this will confirm a forthcoming higher high, and potentially more buyers could join in. For the downside, I need to see a drop below this lower side here, this 182.13 zone, and then yes, we could consider a larger correction to the downside, because don't forget that we're still above this nice trend line here drawn from the low of the 24th of March. So yeah, that's my game plan for now. At this point, I'm just observing the price action, and waiting for this one to do some sort of a move here, some sort of a breakout. EURJPY also working in a similar fashion, but here I said to you yesterday that if we do break and stay below this short-term upside line, I will consider maybe a bit of a retracement. However, we still have to be careful. Maybe some news will come in and then this will reverse sharply. But in general, with the upside, I need to see a push above this 158 territory in order to go higher. For the downside, I need to see like I said, a move below this upside line, and then I will consider a move towards the 23.6. Euro Aussie. So yes, Euro Aussie. I haven't looked at this one for quite a while, but before I put any support and resistance barriers, I can see that after we drifted lower and tested the 200-day EMA, we did a rebound from it and pushed back up, and now we are testing kind of this 100-day EMA, or sorry, not now, but we tested that 100-day EMA. We cleared it, and the 50, we cleared it. We cleared a key resistance barrier right here, of course, this one, and we also cleared a key resistance barrier here, the 1.6517 zone, approximately around here. We did briefly visit the area above it and then retrace back down. So in other words, I am going to keep an eye on that one for now. I'm going to keep an eye on this little hurdle here and this 1.6517. If we do push above it again, then yes, I will start aiming for the upside. For the downside, well, at the moment, I'm seeing a nice little correction, which is fine. And if I draw my Fibonacci, you can see that we're approaching that 38.2, which is okay. Also, maybe the 50-day EMA could approach this territory as well. So all this could, fall in nicely. All the stars could align together with the, the 50-day EMA and this 38.2. But I think that the easier option for me to start looking at some lower levels, and let me just get rid of the Fibonacci, I think I would prefer a very conservative approach and wait for a drop below the 1.6136, because again, I do understand it's not ideal, but something is hinting me that maybe this should be extended to this. And what do we get here? A possibility for an inverted head and shoulders pattern. So maybe the right shoulder is not finished working on yet. So, we're not finished working on this one yet. So, look, maybe more downside could come. We could test this 50-day EMA together with the 100-day EMA. But if we see a hold up somewhere around here, and we start seeing a rebound back up, then yes, a very important level. This could become this 1.65. Or actually, maybe like I said, 1.6516, something like that. But again, at this point, like I said, I'm observing this one. I really like it, but I think I'm gonna leave it for much later. I'll put some alert on it. And finally, EURUSD, guys. So yeah, yesterday tested the downside line again. It provided resistance, and we drifted back down. But then, look, we recovered, and we're now near this downside line. In general, as long as the downside line remains intact, it could indicate the direction of the trend. Doesn't matter short term, long term. And yes, at the moment we're leaning towards the downside a little bit still, as long as we stay below this downside line. However, as I said to you before, I'm considering this to be maybe a possible descending triangle, and for me to in order to go further south, for example, to much lower levels here, then a drop below this 1.0845 territory is required. Yeah, that's the game plan. That's the game plan on this. At the moment, if you're, let's say, not comfortable in trading this territory right here, honestly, I'm not going to blame you, because it is quite tricky here, because again, it's not picture perfect. Maybe we could try to squeeze something with this here. 1.0892, something like that. Okay, if you wish, from the very short term perspective, yes, you could keep an eye on that one, but just be careful that it, although it would be very tempting to, on a break of this, aim for this, still we have the 50-day EMA on the way, which could kind of, jump in a little bit there. So guys, that's it. That's it for this session, for today's session. I really hope you liked it. I really hope you found it useful. That's probably the more important thing. I really, I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, your views, your comments, your rocket ships in there. Guys, really appreciate that. So thank you all. As always, I will say one and only thing, that don't overtrade, have your stop losses in place, and risk only what you can afford to lose, and everything will be fine then. So yeah, thank you very much, and I'll see you tomorrow. Hopefully it's going to be a more exciting day tomorrow. Like I said, don't be surprised if there's not going to be much volatility. Well, you know why. But yeah, looking forward to tomorrow, and I'll see you tomorrow, as always, 6 o'clock GMT time. Thank you very much, and bye-bye. Uh-oh, you just broke a digital image cursing us all to 7 years of market volatility. Undo by subscribing to our channel.